This video is about resistance levels for stocks. On my screen here, I have a price chart for T-Mobile, and each of these price bars, each of these candles represents one day of price activity. A resistance level occurs anytime the high point price of any of these bars is above the high of the bars preceding it and following it. So this bar's, the high price is right here. It's clearly below that high. And on the other side of this bar is this, and this is below that high. That means this right here, it's a peak, and it is a resistance level. It's also referred to sometimes as a swing high. And so anytime that occurs, anywhere on the chart, it's considered a resistance level. Now let's take a counter example. You'll see right here, this bar, the high is right here. The bar preceding it has a high that's even higher. So this couldn't be a resistance level because resistance levels only occur if the high price of the bar following it and preceding it are both lower. So you can see a number of different resistance levels on this chart. You'll see one here, there's one here, and there's one here. So how can a trader or investor benefit from knowing about resistance levels? Well, the idea is that at a resistance level, like this one right here, there's evidence that there are sellers there. After all, the price came up to a point where it wouldn't go up any further because there was enough selling pressure to stop the upward momentum of the price. So it can be seen as evidence that there are sellers who want to sell at this price. And with that being the case, the idea is that if you see evidence of sellers at a particular price level before, then maybe there will be sellers at that price level again in the future. And so if the price comes back up to this level, that gives you an opportunity to make a trade or investment to capitalize on that. So you could either short the stock, or if you already own the stock, you could consider selling it as it approaches that resistance level. Sometimes resistance levels are maintained over a number of bars. So you have kind of standout resistance levels here. This is a very pronounced single bar resistance level. But then over here, this technically is the peak above these two. And then, this one is below that, but higher than that. But it's still all in the same general vicinity. And here in this trading platform, you can see where the mouse cursor is. There's a little hand, and then there's two lines coming out of it. One of those lines is horizontal, and that can sometimes be a useful tool when you're on a chart and you're trying to identify if there's a resistance level or not. Because you can kind of just get an idea, okay, there's clearly a lot of sellers right around here who step up on a repeated basis. And that can also guide you. So it doesn't have to be one single bar. And this may also give you the understanding and realization that resistance levels aren't always clean. This is very clean. It's a standout, pronounced resistance level with one single bar. But sometimes resistance may occur in a pattern more like this. And is this actual resistance? We don't know. That's part of the risk involved with trading or investing. But you could make trades based on it with the hope that the odds might be in your favor. So you can see here, if you see a resistance level starting to form here, you could have taken, a short position, say right here, because you're saying, okay, hey, there's a resistance level forming here. I don't think the price is going to go above there because sellers keep stepping up right here. So I'm going to short the stock right here. And you can see here, you took some heat if you did that. So the trade won't always work out. But now let's look here. This is a new resistance that got created. And you can see the price activity ended up coming down. At the time this was formed, you don't know it's a resistance level yet, right? The price is just kind of moving wherever it's moving. It's beyond any resistance levels. You don't know where the sellers are going to step up, but they stepped up right here. And you can see it really across both these bars. And the price came down, and now it's coming back up. And notice And this video is being filmed here during live trading. You can see this bar is moving. The price came up to this level and turned around. So we don't know where the price is going to go from here, but this potentially could be a reflection of this being a meaningful resistance level. Ultimately, you just never know. Why did the price turn around right there? Was it because of the resistance level? Because it's a bona fide resistance level? Was it because there's other factors involved? Ultimately, there's just no way to be 100% sure. The idea, though, is that you can potentially use a resistance level to give you an idea when you might sell or short a stock and have better odds of success than just 50-50. If you have any questions about resistance levels or about trading, investing, stocks, or options, you can reach out to us anytime. Our email address is support@stockmarketguides.com.